Yeah.
Precious metals, as we talked about, in a world where money's getting confiscated, in a world of inflation, of a world of geopolitical risks, um, it's got to be good. I mean, gold made a new high, backed off it. It probably consolidates for a while, and then if I look at the long-term chart of gold, particularly the inflation-adjusted charts of giant cup and handle formation, and my guess is gold goes to 2,500 plus.
Yeah.
Look, there's some big picture things. I covered gold in the update that I did, which is right now you don't know who owns what assets. You don't own anything because the government's taken it away from you, which is we've kind of known, but it's been writ large in the last few weeks. And I think even though gold is coming off because it had a good squeeze higher, I think we're going to see more action there. The one to watch, I think, is the dollar. The dollar is really important, and the dollar is very strong. I do expect the central banks to try and slow it down at some point, but the dollar going up basically creates credit issues for the global economy. We've already seen places like Nigeria running short of dollars. We're seeing it in Sri Lanka. We're seeing it in the periphery. It always happens in the periphery first and then comes back. So there is liquidity issues further out in the system. So just keep an eye on the dollar. The more the dollar goes up, the more liquidity issues you're likely to face, and the world struggles a bit. So just keep your eye on that.
Yeah. Raoul, before we hit the questions, one more thing that I wanted to hit, which is important, is a conversation that you had with Russell Clark. This is going to be out next Friday on Real Vision. So you're actually getting a sneak peek of something that's ahead of its appearance on the platform called The Shale Revolution is Here. Let's take a look at that clip.
When you're managing money, it's a little bit hard because if you commit to one view on something and then you raise money on the back of that view, the threshold for you changing your opinion suddenly goes through the roof because you're going to go back to people and say, oh, actually, shale is the real deal. Whereas when you're sort of more sort of independent and free, you can look at it and go, actually, the data now is coming in very differently to how I expected. And that's exactly what's happened recently. It's like, I must say, I thought when they started to go through this huge inventory of old wells in this drilled uncompleted wells in the States, I thought they were going to find that these wells were empty. They had no oil or gas. They were just drilled to raise money. And so you'd see productivity collapse. And the opposite's actually happened. Productivity's sort of gone up a lot. And that's been like also sort of mind-opening for me because it explains a lot of these sort of weird things like I look at US budget deficit, you could look at the Fed, I look at a lot of things and think, God, the dollar should just get absolutely crushed. And all it does is stay very strong. I mean, very strong against currencies like Russian ruble, Turkish lira, of course. But it's, I think perhaps we're in the shale revolution. I suspect maybe I've underestimated.
Such an interesting clip. I particularly enjoyed the bit about how when you raise money, the friction associated with changing your opinion goes through the roof. But to the substance of the point, Raoul, a really interesting point. Basically, this notion of what's happening with the dollar. The dollar keeps rising. Give us your context on that and how it ties in with what we just heard.
So this is going to tie back to Bill Tai as well. So Bill Tai talked about petrodollars and electrodollars, and that crypto is the electrodollar based around electricity, while the petrodollar was based around supply and demand for oil. So we've been in a petrodollar system since we floated off the gold standard. Now, what does that mean? It meant that the US was one of the biggest importers of crude oil in the world, if not the biggest importer. So they would spend dollars, and these dollars floated around the global system, keeping it liquid. But the shale oil revolution, as Russell points out, did the opposite. It meant that the US didn't need to import as much. Yes, it has to import some different grades of crude and stuff like that, but generally speaking, it's self-sufficient in oil. So that is a lot less dollars into the global system. So if there's a lot less dollars in the global system, the dollar goes up. It's like ETH burning. It's like Bitcoin supply. If there's less dollars sloshing around the global system because the US aren't spending it, it drives the dollar higher. And that's one of the things that's kept the dollar strong for a period of time.
Yeah. So what do you say, Raoul? Should we jump in and do some questions?
Let's do it.
Okay, first one comes to us from Nathan E. And this comes from the Exchange. That's Real Vision's internal social media network. And the question is, would love Raoul's thoughts on precious metals and commodities in the near and medium term.
I understand the thesis. People like Tracy Shuchart talks about, Tony Greer, that there's a big commodity supply issue and a reasonable amount of demand. I think the demand side of the equation will be weaker going forwards. I get the structural issues. I don't like owning commodities in spiky markets like this where you get news flow and it falls 20% overnight. I think that's hard. Commodity producers, maybe you've got a better opportunity, but they've been very spiky. So if you're not in the trade, it's not a trade I can enter now. The pressure, and are we in a commodity super cycle? The answer is I don't know. It's possible. We're due one at some point. I just don't know where the demand side of the equation is, except for ESG demand. So I can see the copper side, the nickel side. There's a whole bunch of these things that are very important in that. And so, with a reduced supply and normal demand in crude, I can understand the prices might remain high. Yeah. Precious metals, as we talked about, in a world where money's getting confiscated, in a world of inflation, of a world of geopolitical risks, it's got to be good. I mean, gold made a new high, backed off it. It probably consolidates for a while. And then if I look at the long-term chart of gold, particularly the inflation-adjusted charts of giant cup and handle formation, and my guess is gold goes to 2,500 plus.
Yeah, really interesting. I was actually thinking about this earlier. It's like the Tony Greer trade and the Cathie Wood trade. I think they may both be right, just on different time horizons.
That's always the case. That's why I find it ridiculous that people insult each other for, I'm a commodity person, that's a tech person, those guys are idiots. It all works in the right way at the right time. I've been waiting to buy these blown up tech stocks ever since I talked about the exponential age thesis. I've not bought any of them yet because they were 2 standard deviations overbought versus the log trend. And I've been waiting to get to 1 or 2 standard deviations oversold. And lo and behold, that's where we are now. So I'm kind of looking at them very actively and looking for a change in the macro to buy them.